Amazon's Q4 2024 earnings analysis. 60% chance Amazon beats earnings expectations. Driven by robust performance in Amazon Web Services, AWS, and sustained e-commerce growth. 30% chance Amazon meets expectations. Potential impact of increased capital expenditures and regulatory challenges. 10% chance Amazon misses expectations. Risk factors include intensified competition, macroeconomic uncertainties, and high operational costs. Financial performance and key metrics. Amazon is set to report its Q4 2024 earnings on February 6, 2025. Strategic initiatives fueling growth. AWS expansion and AI leadership. AWS continues integrating AI-powered services, competing with Microsoft Azure and Google Cloud. AI and machine learning investments drive efficiency and innovation in AWS, helping it maintain dominance. Amazon Prime and subscription services. Higher adoption of Prime memberships and expansion of content in Prime Video contribute to revenue growth. Live sports streaming. Amazon invested $3 billion annually in acquiring rights to major sports leagues, NFL, NBA, positioning Prime as a media powerhouse. Project Kuiper. Amazon's low Earth orbit satellite project aims to provide global broadband access, rivaling Starlink. Short-term capital expenditure pressure, but long-term revenue potential in telecom and enterprise connectivity. Challenges and risks facing Amazon. Regulatory and antitrust scrutiny. Amazon faces increased scrutiny over antitrust practices in both the US and Europe, which could lead to restrictions on operations. Rising capital expenditures. Investments in data centers, AI infrastructure, and logistics continue to pressure profit margins. Macroeconomic and consumer spending trends. Consumer discretionary spending remains a potential headwind if inflation and economic uncertainty persist. Technical indicators and valuation. Relative Strength Index, RSI 61, neutral, neither overbought nor oversold. Moving averages. 50-day MA, $221.90. 200-day MA, $194.40. Amazon is trading above key moving averages, indicating bullish momentum. Current price to earnings, PE, ratio, 50.82. Higher than Alphabet, 26.81, and Microsoft, 33.28, reflecting a premium valuation due to expected future growth. Peer comparison. Amazon versus big tech rivals. Amazon competes with major tech giants like Alphabet Google and Microsoft MSFT across multiple segments, including cloud computing, advertising, and subscription services. Amazon's PE ratio of 50.82 is significantly higher than Alphabet, 26.81, and Microsoft, 33.28, reflecting investor confidence in its strong future growth. In cloud computing, AWS leads the industry with 32% market share, ahead of Microsoft Azure, 23%, and Google Cloud, 11%. Amazon's dominance in cloud services continues to drive strong revenue growth, making it a key component of its earnings outlook. Amazon's advertising business grew 19% YOY, surpassing Alphabet's 14% YOY growth in ad revenue. This indicates that Amazon's retail media network is gaining traction and taking market share in the digital ad space. Unlike Microsoft, which does not heavily rely on advertising, Amazon and Alphabet continue to compete for dominance in this segment. On the subscription front, Amazon has a robust offering with Prime Video, Music, and Audible, making it a diversified entertainment ecosystem. Alphabet's YouTube Premium is its primary subscription product, while Microsoft focuses on LinkedIn Premium and Game Pass in the subscription space. Overall, Amazon's premium valuation reflects its leadership in cloud computing, its expanding presence in digital advertising, and the strong ecosystem built around its Prime membership services. Final recommendation. Buy if you believe in Amazon's long-term dominance in cloud computing, AI, and digital commerce. You seek exposure to a high-growth tech leader with strong cash flow and revenue diversification. Hold if you are cautious about Amazon's high PE ratio and potential regulatory risks. You expect a market correction or profit-taking after earnings. Avoid if you are concerned about rising capital expenditures impacting profitability. You prefer companies with lower valuation multiples and stronger dividend payouts. Final thoughts. Amazon remains one of the most dominant tech companies, with strong tailwinds from AWS, digital advertising, and Prime expansion. However, high capital spending, regulatory risks, and macroeconomic uncertainty remain challenges. Given its track record and strong Q3 performance, Amazon has a 60% probability of beating earnings expectations, but investors should be mindful of valuation risks. Disclaimer: this analysis is for informational purposes only and does not constitute financial or investment advice. Investing in stocks involves risk, and past performance is not indicative of future results. Always consult a certified financial advisor before making any investment decisions.